All right, so have you ever been in that situation? You know, when you're on vacation, you finally get to relax after like months of planning, and you go to exchange some cash and you hand over what feels like a small fortune, and then bam, you get hit with this terrible exchange rate. Like suddenly that souvenir or whatever it is looking like a risky investment.
Happens every time.
Right. It's like, well, it turns out that's kind of like your crash course into Forex trading, right? Except on a much larger scale.
Okay.
So that's what we're diving into today. Using some really insightful research on the basics of Forex. Hopefully, by the time we're done, you'll be fluent in currency exchange.
At least sound really smart.
Or at least, yeah, you'll know more than that one friend who always seems to get the best rates.
Well, let's aim for informed and insightful.
Okay, yeah.
Rather than just, bragging rights about exchange rates.
Right.
But you're right that everyday frustration of getting a less than ideal exchange rate, that really is the core concept behind Forex trading.
It is, yeah. It's like this whole market revolves around trying to like predict and profit from those fluctuations.
Exactly.
And our source kicks things off by pretty much nailing that vacation analogy. Like, we exchange currencies to buy things when we travel, right? But what's really going on in those seemingly simple transactions?
Well, it's about more than just, funding your gelato fix or whatever it might be.
Right.
But yeah, when you trade your dollars for euros, you're essentially participating in a mini version of the Forex market.
Wow, really?
Yeah. The real difference is Forex traders are doing this on a much grander scale.
Okay.
They're aiming to profit from those constant shifts in exchange rates.
It's wild to think about, right? Like, our vacation woes are just these tiny little ripples in this like massive ocean of currency exchange.
Yeah.
But here's where I always get tripped up. Like, what are we actually buying and selling in Forex? It's not like stocks where you own a piece of a company.
That's a really important distinction. In Forex, you're not buying a tangible asset. You're essentially betting on the relative strength of one currency against another.
Okay.
And it always involves pairs.
Okay.
So, for example, imagine the U.S. dollar's on the rise against the euro.
Mm-hmm.
That means for every dollar you exchange, you're going to get more euros back.
Okay.
Forex traders aim to predict these movements.
I see.
Buying currencies they believe will strengthen against those they anticipate will weaken.
So it's less about owning a currency and more about like capitalizing.
Yes. Yeah.
Capitalizing on those constant shifts in their value, like relative to one another.
Right.
Okay. That clicks way better than the water bottle analogy. No offense to bottled water.
None taken.
Gotta stay hydrated.
It's important.
Especially with those trading sessions. So we've established that currencies trade in pairs.
Right.
With the one potentially like gaining an advantage over the other. But how do we even begin to predict those currency showdowns? Like, what factors are influencing which one comes out on top?
Well, if I had a crystal ball that could predict currency markets with absolute certainty, let's just say we'd be having this conversation from my private island.
Okay, I would definitely tune in for that episode, Beaches, Insights, maybe a pina colada in the background.
Now you're talking.
Sounds like a winning formula.
But in all seriousness, while we can't predict the future, we can get a pretty good grasp of the forces at play.
Right.
Our source breaks down 4 key factors that can shift those currency power dynamics.
Okay.
Trade between countries, interest rates, inflation, and of course, the ever unpredictable world of politics.
Right, because it's never just about the numbers, is it? It's like this whole web of like interconnected global events and trends, right?
Yeah.
So let's try to untangle this a little bit.
Okay.
Starting with trade. Like, how does what countries are buying and selling actually affect the values of their currencies?
So think of it this way. Imagine a country suddenly becomes like the place to get the hottest new gadgets.
Okay.
Everyone wants in on these, must-have electronics, which means they need that country's currency to buy them. This surge in demand pushes the currency's value up, making it stronger against others.
So it's like supply and demand, but on a global scale.
Exactly.
Okay. So a country's currency becomes a hot commodity if everyone's clamoring for what it's selling.
Yeah.
Makes sense. What about interest rates? That one always feels a bit like financial code to me.
I hear you. Interest rates can seem a bit abstract.
Yeah.
Think of it this way. They're like a financial beacon, signaling to investors where their money can grow the most.
Okay.
A country with high interest rates, very attractive to foreign investors because they can earn a better return on their investment there.
So it's all about chasing those higher returns.
Precisely. Investors are constantly seeking the best bang for their buck, even if it means moving their money across borders. And this constant flow of investment capital has a direct impact on currency exchange rates. So let's say, for example, the U.S. Federal Reserve hikes interest rates.
Okay.
Suddenly, the U.S. dollar starts looking pretty appealing to investors holding euros or, say, Japanese yen.
Makes sense.
They swap their currency for dollars, driving up demand, and voila, the dollar strengthens.
Wow. It's amazing how these financial levers can create such a ripple effect across the globe.
Yeah.
But let's not forget about inflation, which, if we're being honest, is something we're all feeling a bit more acutely these days.
You're telling me, remember when that extra shot of espresso was basically a given?
Oh, yeah.
Now it feels like a luxury add-on.
Right.
Inflation, the party crasher, no one invited.
Right.
But it has a huge impact on currency values.
Right, because when prices for goods and services keep going up, our money just doesn't stretch as far as it used to.
Exactly. And just like with those pricey espresso shots, high inflation can weaken a country's currency on the global stage.
It's like our money is worth less.
Yeah. Let me give you a real-world example. The Venezuelan bolivar.
Oh, this is where it gets real, isn't it?
Right. Venezuela experienced hyperinflation a few years back. We're talking prices doubling, sometimes even tripling, every few weeks.
Oh, wow.
The bolivar became almost worthless as its purchasing power evaporated practically overnight.
It's a stark reminder that a stable currency is kind of crucial for a functioning economy.
It really is.
Wow. But I'm guessing those central banks we talked about before have a role to play here, right?
We do. Remember how I mentioned interest rates are like a financial beacon for investors?
Yeah.
Well, central banks can adjust those rates to try and steer the economy in a stable direction.
Okay.
So when inflation gets out of control, they might raise interest rates to try to cool things down a bit.
It's fascinating how these economic forces are all intertwined.
Yeah.
But we've still got one more player in the game, and it's the one that often throws those perfectly laid economic plans out the window.
Tell me about it.
Politics.
Ah, yes. Politics. The ultimate plot twist.
Right. It's like trying to solve an equation where the variables keep changing without warning.
Yeah.
But seriously, why does politics have such a big impact on currency?
Well, think about it. Political stability, or the lack thereof, directly impacts how confident investors feel about a country's economy.
That makes sense.
So, for example, let's look at the UK after the Brexit vote.
Ah, Brexit, the gift that keeps on giving.
Right.
Mostly headaches, though, if we're being honest.
Exactly. The uncertainty surrounding the UK's departure from the European Union created massive volatility in the value of the British pound.
Oh, I bet.
Investors get nervous during times of political upheaval,
Right.
leading them to pull their money out, which can lead to a currency's value plummeting.
It's a classic case of fight or flight, but with money instead of fists.
Exactly.
So we've got trade flows, interest rate hikes, inflation anxieties, and political cliffhangers, all these factors swirling around, influencing the rise and fall of currencies on the global stage.
All the time.
Yeah.
It's a complex system.
It's enough to make you dizzy, honestly.
A lot of moving parts.
Yeah.
That's also what makes it so fascinating. Yeah. But remember what we said at the beginning. Understanding these underlying factors. It's key to navigating the world of Forex trading.
It's like we've been given a peek behind the curtain at the Wizard of Oz, revealing the intricate machinery that drives these currency fluctuations.
It is a bit like that.
But I have a feeling this is just the tip of the iceberg, right?
Yeah.
There's a lot more to mastering Forex than just understanding these big picture factors.
It is a bit like that. Yeah, there's definitely more to it.
You're telling me we've only just dipped our toes into the vast ocean of Forex.
We've just gotten started.
It's like we've been given a backstage pass to the world's biggest, most chaotic casino, but we haven't actually, sat down at a table yet.
That's a pretty accurate analogy.
Yeah.
Understanding the underlying factors that influence currency movements is crucial, but it's just the first step.
Okay.
Successful Forex trading requires a deep dive into different trading strategies, risk management techniques, a whole lot of discipline. It's a lot.
So what you're saying is knowing that political turmoil can, tank a currency is great for cocktail party chatter, but it's not exactly a foolproof trading strategy.
Let's just say it's not as simple as, checking the headlines and then placing your bets.
Right, right.
Remember all those economic indicators we discussed?
Mm-hmm.
Trade, inflation, interest rates?
Yes.
Forex traders spend their days analyzing economic data releases, central bank announcements, global news beat, trying to get ahead.
So it sounds like being a Forex trader is part economist, part news junkie, and part, well, dare I say, gambler.
There's definitely an element of risk assessment involved, for sure.
Right.
But responsible traders, they rely on a combination of analysis, strategy, and risk management to navigate the market.
Okay.
It's not just about picking winners and losers.
Right.
It's about managing your risk and protecting your capital.
This has been a real eye-opener. I feel like I've graduated from getting fleeced at those airport currency exchange kiosks to actually understanding the forces behind those ever-changing rates.
And that's what's so fascinating about Forex.
Right.
It's a truly global marketplace. It operates 24/5, reflecting the interconnectedness of the world economy.
Wow.
Like every transaction, every fluctuation, it tells a story about the forces shaping our world.
It's like a never-ending financial soap opera, but with real-world implications.
That's one way to put it.
I'm already hooked. So, for our listeners who are feeling equally intrigued but maybe a bit intimidated by the learning curve here, what advice would you give them? Where do they even begin?
I'd say embrace that curiosity.
Okay.
There are tons of resources available for those who want to dive deeper. Online courses, books, trading simulators.
Oh, cool.
Just remember, with any investment, knowledge is power.
Right.
Start with the fundamentals, develop a solid understanding of the risks involved, and don't be afraid to ask questions along the way.
That's some solid advice. Start with curiosity, add a dash of knowledge, and always, always manage your risk.
Exactly. And who knows, maybe one of our listeners will become a Forex guru, navigating the markets with the best of them.
And if that happens, you heard it here first. But seriously, we hope this deep dive has demystified the world of Forex trading and sparked some insightful conversations, maybe at your next cocktail party.
Exactly.
If you've got any aha moments or burning Forex questions, we want to hear from you. Hit us up on social media using #TheDeepDiveForex.
Yeah, your insights might just inspire our next deep dive.
Ooh, that's a good point. Until next time, happy exploring, and remember, whether you're navigating currency markets or just trying to snag the best deal on your next vacation, a little knowledge goes a long way.